Is this really one of the best environments we've seen in some time for investing in both stocks and bonds? Anastasia Amoroso is Partners Group Chief Investment Strategist for Private Wealth and is here with us on set. Got a lot of play on this call that Rick Rieder made yesterday, sitting in this very chair. Do you agree with him?
I mean, I do. I think this environment has a lot of positives to it. And, you know, coming into a couple of weeks ago, we were debating this quarter of adjustment and the fact that companies had to absorb the tariff increases. But now coming into this week, it's all about the rate cuts, and maybe not just one rate cut, but a series of rate cuts. And I think there's potentially a scope for 2 or 3 this year. So that does change the narrative quite a bit because it really cushions whatever softness we were expecting to see in the third and fourth quarter.
Do you think there's better value in stocks or bonds right now?
I mean, look, I think we're not that far away from neutral rate. You know, I don't think we're that far away from terminal rate. So maybe we get 75 basis points or 100 basis points of rate declines, and surely that props up the bond market. But I do, generally speaking, see more value in the equity markets, both public and private. I think you have a lot more innovation. I think you have a lot more room for earnings growth and potentially for earnings revisions. And Scott, you know, moments like we had earlier today, and also just the IPO market in general this year, it's actually perking up. We're about 21% year over year in terms of IPO activity, about 30% in terms of M&A activity. So it does tell me that there's this value unlock that is likely to happen from this crossover from private to public markets. Are
there any feelings of euphoria that you would be concerned about when you see, you know, this has nothing to do with the merits of a company like Bullish. They're obviously in the right place at the right time with a business that the market deems to be in a high growth area that's fast being deregulated. So I can see why this is up the way it is. Many of the other IPOs that have come public have done the same thing.
Yeah.
There are several, you know, meme-like names within the public markets that have traded crazy in the last several months. Does any of that give you pause?
I mean, not on a broad scale. And I say that because if you look at the average IPO, that IPO this year over $1 billion, it's up about 50-60% depending on the day. And I think there's a lot of strength to those companies that have waited to go public for a long time. So there is the maturity stage of some of those companies. There's also the revenue and the earnings growth. So I wouldn't say broadly there's this degree of exuberance. I will say, Scott, that clearly there's a mispricing that's happening in the IPO market right now. And the fact that some of the companies are surging as much as they are suggests that demand is incredibly strong for some of these growth stories for both retail and institutional investors. And so I wouldn't necessarily say that's a sign of euphoria. Perhaps it is a sign of clarity. You know, if you think about, you know, why we're having this success with the IPO market is finally we have clarity around tariffs, whether we like the rate or not. Finally, we seem to be approaching clarity on what the Federal Reserve is going to do in the fall. And the U.S. economy, fine, it's slowing, but it's still growing at close to 2%. So that's a lot of certainty for those CEOs looking to take their companies public.
Are you a believer in the broadening story that some are now trying to tell again?
I am. I mean, look, financials, for example, is a sector that stands out to us, and that's really benefiting from all the trends that I discussed. You know, the capital market activity is picking up a lot. If you look at consumer spending, the real-time data is showing 4 or 5% consumer spending growth in terms of credit card spending for the month of July. So, by the way, we get retail sales later this week, and I think that should be a fairly robust number. If you think about industrials and the big, beautiful bill that was passed and the incentive that is for industrial activity. So I do see many growth drivers. And then on top of all of that, Scott, there's, of course, the AI data center story. You know, CoreWeave, fine, is not doing so well today, but we're big believers at Partners Group in the AI data center opportunity. If we look at some of our portfolio companies, like EdgeCore, for example, it is absolutely a platform for data center growth for hyperscalers. And AI data centers is exactly what they're building and scaling, because that's a much faster rate of growth than what you see generally in data centers.
All right, we'll leave it there. Thanks for being here once again, Anastasia Amoroso.